Many people tend to think that it is very difficult for you to generate tons and tons of money in the stock market. And yet, as I continue, or as I've been telling you, there are so many people who have made tons and tons of money in the stock market by simply setting some ground rules or by setting certain principles that enables them to get closer and closer to financial freedom. And I must tell you, and I think I ought to tell you, that there are so many people out there that have cracked this code and became independently wealthy through the stock market. There are so many people that have done that, and I certainly believe that there are still going to be many people that are going to make it big in the stock market even in the years to come. Though there are so many people that may be complaining about certain companies or complaining about the fact that some of the economies around the world are not doing well. But let me tell you something, that to each and every crisis there is an opportunity. So on today's video, guys, I will be giving you a set of principles. These are the same principles that I'm personally following because I want to get to financial freedom through the stock market. I want to get to that point where I know that I'm independently wealthy because of the stock market. And these 10 principles or these 10 rules that I personally use in my stock market investing journey, it's the same rules that many of the most successful investors out there are using. And I certainly believe that with these rules, as I've said, you can definitely find yourself making your first million rand in the stock market. I know it might seem very difficult, but with patience, consistent action, and self-discipline, I certainly believe that you can get to a point where you generate 1 million in the stock market. So please do watch this video until the end, because I definitely believe that you are going to like these 10 principles or rules that I have for you that can take you a step closer to your financial freedom. Otherwise, please know that I'm not a professional financial advisor, and if you seek professional financial advice, you already know what to do by now, and that is you need to go and consult the professionals. Now, principle number 1, guys, or rule number 1 is don't put your money or only invest in South African companies, because, ladies and gents, there are some of the things or some of the news that can come out and hit the South African economy so hard that even the companies in South Africa don't perform or don't do well. I think here in South Africa, we've got opportunities to even invest in companies that are listed in the US Security Exchange, which is something that you ought to take as an opportunity for you to invest even in the countries that are outside. And the good thing about investing in companies that are in the US is simply because of growth. The economy there is very strong, or the economies in countries like the US and China are quite massive or are quite big, meaning that even the stocks or the companies that operate there, they can easily make or give you good returns in your investments. So it's quite important that you not only invest in the local companies, but you consider also investing abroad, because as you know, right now in South Africa, we are currently facing a chaos. There's been looting of shops. Companies that have been looted, you might find that some of them have not actually quantified the amount of loss that they've experienced. So you might find that by the time that is factored in, you will find that majority of the stocks or most of the stocks locally, you might find them declining due to that. But one thing for sure is that, guys, if you are to consider also investing in other stock security exchange or other stock exchange like the US stock market, things like this, though they impact you, they impact a portion of your portfolio, because you know that a section or another section of your portfolio is invested in the US or in other securities exchange, which is something that will not make you to panic that much, but also gives you comfort as you see the other companies or stocks in your other portfolio or in your US portfolio doing well, which is something that I definitely think that what's happening in our country ought to encourage us to not only invest locally, but also consider investing outside of South Africa. Now, principle number 2 that can make you get closer to making or generating this 1 million by the stock market is one thing that I've touched base with you, and that is you need to consider having a growth stocks in your portfolio, as these are the kind of stocks that are in sectors that are said to do very well in the future, guys. I will tell you something, as I've told you in one of my previous videos, and that is having companies in your portfolio which are not said to do very well won't make you succeed in your stock market investing journey. Meaning that if you are having a lot of dividend stocks or value stocks, you might find that at the end of the day, the returns that you make in those kind of stocks are limited. Yes, I know that some might say that growth stocks are volatile or growth stocks are riskier, but I will tell you that if you are to do your own due diligence, or if you do a due diligence on a stock, chances of you losing money, then it becomes a bit slim, because you know exactly what to expect out of that growth stock that you bought, or out of that growth stock that you own, which is something that ought to encourage you to consider having these growth stocks, because this is the only chance that will make it possible for you to get to see the first 1 million in your stock market portfolio. Though, as I've said, I know many of you might say that some of the growth stocks are riskier, but one thing for sure is that if you are to consider having these growth stocks in your portfolio, they will get you closer to your financial freedom very fast. I mean, some of these growth stocks are expected to do very well in a short space of time. You'll find that a growth stock or a certain growth stock is set to double in a space of 12 months, or this growth stock is set to triple in a space of 5 years, which means that if you are to put a chunk of money in that growth stock or in that stock, it definitely means that you will be able to triple or double your money in the next 3 years, or in 3 years time, which is something that you must always bear in mind when you're investing in this growth stock, which is the reason why I definitely think that it is, or it can make it easier or possible for you to generate this 1 million rands. Which brings me to point number 3, or principle number 3, which is when you find this good quality growth stock, guys, when you find this growth stock which is said to do very well, guys, throw in a big chunk of money, or throw in some good money, guys. This thing of saying that you are going to invest 100 rands on each and every stock, maybe on a month to month in your portfolio, guys, will make you to miss opportunities, or will make you not to succeed as you should in the stock market. Because let me tell you something, guys, if there is a company that is said to give you like 500% in the next coming 5 years, and there is another company B that is said to give you 100% in the next coming 5 years, I definitely think that you ought to prioritize and put in more money in that company which is said to give you 500 in the next coming 5 years, because that company is able to give you 5 times of the money that you invested in that stock. Whereas on that other side, it will only give you 100% of the money that you invested in. Now, can you see what I'm trying to show you here? I'm trying to tell you or show you that when you find a good opportunity, or when you find a stock that can seriously grow your money, when you find that growth stock that you know that if you are to put a chunk or a good money in on that stock, then it will do very well in the next future, or it will triple or give you 500% in the next coming 5 years, then I think you ought to prioritize that stock and put in some good money, or put in some good chunk of money in that stock, because then you know that chances of you making it big, chances of you getting closer to that 1 million mark, it's very possible. I mean, this is exactly the same thing that I do. There is always those kind of stocks that I don't invest like the others. I don't put like 1,000 rands like the other stocks that I do on a month to month. But there are those kind of stocks that, let's say for example, I have 10,000 rands, then I might put 5,000 in one stock, then I split the other 5,000 on the other stocks, just simply because that I want to make sure that I generate good money with that stock that is set to do very well in the near future, which is something that I definitely think that you also have to consider. Now, principle number 4, guys, this is what I've already told you, or this is something that I always sing in my stock market investing videos, and that is a long term is always a winner. So when you invest in the stock market, guys, don't invest or don't buy the stocks today and sell that stock that you bought next week. Don't do that. Don't invest a short term, or don't invest in the stock market for a short term, because you will miss good opportunities, or you will miss the good returns that you will find your fellow colleagues, your friends generating. What am I trying to say by this? I know there are some of the people that will tell you that use a strategy of buying low and sell higher, and yet that stock that they are telling you to do that, you'll find that it's a stock that is set to grow by 500%, like for instance in the next coming 5 years. You know that if you just put your money and don't sell, chances are very high that you'll generate 500% in the next 5 years. So why would you want to sell that stock after 1 month? Why would you want to sell that stock after getting to, or after generating 60% in 1 month? Why would you want to do that? So I don't think it's necessary for you to be selling that stock when it hits 100%. I don't think that it's necessary for you to even sell that stock if you is to hit 200% in 1 year. No, don't do that, because you know of the kind of growth that that stock can generate, or the kind of growth that you can see on that stock in the next coming 5 years, which is something that ought to encourage you to think long term on that stock, irregardless of what comes, or irregardless of the kind of returns that you might see that stock generating within 5 years. As your research, or as your analysis, or as per the analyst's expectations, then you ought to hold that stock until it reaches that 500%. What is it that you lose, guys, by just holding that stock even further? Because the main issue, or your main goal, should be to generate good and massive returns that can make you become independently wealthy by the stock market. I think one of the greatest investors of all times, and that is Warren Buffett, he indicated, and I quote, and he said, if you are not willing to own a stock for like 10 minutes, then forget about owning the stock for 10 years. So he's always emphasized, or always tell people to always consider or think long term when they invest in the stock market. That is the only way that will make you succeed in the stock market. Why would you want to withdraw a stock after it hit 500% when that same stock, maybe in the next, or should you hold that stock maybe for another extra 5 years, you are going to generate another 200 to 300%. Why would you sell it at 500%? Now, you see, you ought to always think long term, which is why it's important to always track and trace the growth potential of the stocks that you own, because if the growth potential of that stock is increasing all the time, or every 2 or 3 years it's increasing, then I think that that is the stock that you ought to keep for a very long time, as it can and will generate you good returns. Otherwise, now, principle number 6, or point number 6 that I want to highlight to you is that, guys, you need to know and understand that, as I've indicated, that you need to consider having growth stocks in your portfolio, as that can give you or make it possible for you to generate good money. You need to understand that, guys, growth stocks are very volatile. So when you invest in this stock, already you must know that these kind of stocks, they're the kind of stocks that can generate you 300% in 6 months, and they drop by probably 200% maybe after 6 months. It's possible. These are the kind of things that are very common with these growth stocks, but you'll find that after that 400 drop, it rises again by 600%. So this is the kind of movements that you must expect with the growth stocks, which is why it's important for you to deal with your emotions before you purchase these growth stocks, and know that they can be able to play with your emotion and make you sell the good quality growth stocks that you will end up regretting selling. So these growth stocks, guys, they can deceive you at times, and you feel like probably this stock has done its utmost best, and you sell that stock, and guess what, after selling that stock, then you see that stock rising or going up by over 300%, which will give you a heart attack or make you to stress, because you know that you missed an opportunity of a lifetime. So guys, these opportunities that we see on these growth stocks can only be attained by those that train their mind not to panic and relax and chill. As it drops, add more positions. As it drops, add more positions. If it goes down by 200% and you know it is set to do very well in the next coming 5 years, then add your position. That is a very good thing that will make you, or that I myself personally do, which is why I certainly end up smiling at the end of the day, because you find that those stocks that had dropped, or that stock that had dropped by 200% regained 300%, putting me to a positive, which is something that ought to inspire you or encourage you to always consider or to deal with your emotions when you invest in these growth stocks. Now, principle number 7, guys, or point number 7 is that, guys, you need to accept missed opportunities. Guys, there's something that you must really consider in the stock market. And I've seen so many people making mistakes of trying to jump in the stock when it's already too late, or trying to jump in the stock because of fear of missing out, which ends up making those kind of people regretting or selling that stock at a huge loss, because they fear to miss out on the good returns that their peers are making out there, which I certainly believe that you must accept, guys. Don't buy this stock when it's trading or when it's so expensive. Don't buy a stock when it's trading at a very high price, because that, my friends, might make you not make as much money as you ought to make, or that can make you to generate a legal revenue or legal returns, which is something that I don't advise people to do, because remember, like I said, in the stock market, the main reason why we invest in the stock market is because we want to generate good returns, or generate massive returns, which is something that you always have at the back of your mind. If there is a stock that can generate you 500%, rather put your money there, because there you know that at least in the next coming 5 years you can generate good returns. Which brings us to point number 8. I know I've touched base on these, guys, and that is, you need to know the price target of the stocks that you are buying. Don't just buy these stocks, guys. Know the exact price target. Like me and my previous videos, you'll find that in some of the stocks that I discuss, I give you the 12 months price target, meaning that I give you the trading price that we can expect that stock to trade at in the next coming 12 months. You need to always be tracing. You need to always check this price target of the stocks that you own, because it's not good for you to own a stock that will grow by probably 5% in the next 12 months, or it's expected to grow by 5% in the next 12 months, when there are stocks, guys, that can grow by 50%, that can grow by 100% in the next 12 months. Rather, invest in stocks that you see that they can give you good returns in the next coming 12 months. Rather than just investing in those stocks that can just give you 5% or 10% in the next coming 12 months. This is what myself I prioritize. If there's a stock that can give me more returns, or that analysts are expecting it to grow by more than 100% in the next coming 12 months, then that is a stock that I prioritize. Otherwise, principle number 9, or point number 9, guys, is that you need to be always up to date with the latest news of the stocks that you own. Guys, you don't Don't just buy a stock and relax and not read about that stocks or not read about the latest developments about or relating to that stock. Because you might find that stock going down or dipping by 100%, or you wake up one day, you find that that stock you own went down by 60%, but you don't understand. But most of the others knew that was going to happen because they read or they went in on the internet and read about that story, which is why it's important for you to read those kind of news. Or you find that you wake up one day and the stock that you own grew by 30% in one day, and you don't know the reason why it happened that way, but yet maybe there was an article 2 days before indicating the positive news that drive that stock up by 30%, which made so many people, when that article came, to add so many positions in that stock and grip or get that good 30% when that stock shoots up. So it's important to always be up to date with the latest news on the stocks that you own. Otherwise, point number 10, which is the last point now, guys, it's very important that you keep up to date with your earnings results or with the financial results of the stocks that you own, because you remember that the financial results is one of the aspects of a company that encourage investors into coming to invest into a company or a stock. If the company is generating good revenue every time they report this earnings report or the financial reports, that, my friends, ought to be taken as a good sign to invest or stay long into that stock. If the company is reporting a more positive or a higher positive EPS or earnings per share, that also, my friend, it's a very good sign that should or ought to be taken when you are investing in this good stock. And those are some of the things that will also tell you that you need to probably add more positions into this stock because it is doing so well even financially. It reported a good revenue growth. It reported a higher EPS than the one that it had reported in the previous quarters, meaning that it is showing that that company is becoming more profitable, which is something, guys, that ought to encourage you, as I've said, to add more or to stay long into that stock. Otherwise, guys, I definitely believe that if you're to master these 10 principles, you are going to get closer to making your first 1 million in the stock market, because these are the 10 principles that even the successful investors in the stock market are practicing. These are the kind of principles that will get you closer to financial freedom. Otherwise, with all that, guys, I make tons and tons of stock market investing videos, and if you think that this video was amazing, please don't forget to hit that like button. If you are new, please don't forget to hit that subscribe button and click on the notification bell so that YouTube can notify you every time I release a video. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey, and God bless you all.